Hello and welcome to Startup Street. I'm Arundhati Ramnin, and these are the top headlines that we're tracking for you from the startup world. Gaming platform Nazara Tech raises 900 crore rupees from its existing investors. Nazara also acquires an additional 19.35% stake in Absolute Sports, the parent company of Sportskeeda, for 145.5 crore rupees. Daily Objects, a D2C design and lifestyle brand, has raised $10 million in a Series B funding round from 361 Asset and Roots Ventures. The company claims to have witnessed over 3x growth over the past 4 years and is now looking at offline expansion. Gen Z-focused meme-based dating platform Schmooze has bagged $4 million in a Series A funding round led by Elevation Capital. The newly raised funds will be used for growth and expansion as well as to enhance its AI engine. IKEA-backed home decor startup Livspace's revenue grew 21% in FY24, and the firm has managed to cut its adjusted EBITDA loss by half during the same period. The firm's revenue grew 1,185 crore rupees from the 981 crore rupees in the preceding year. Actor Madhuri Dixit picks up shares in Swiggy ahead of its public market debut later this year. Money Control reported that Dixit paid 345 rupees for each share of Swiggy and has bought shares in the secondary market along with Ritesh Malik, founder of Innovate. Amazon has named Samir Kumar as the country manager for India. Along with managing India, he will continue to lead Amazon's consumer business in Middle East, South Africa and Turkey. This comes after Manish Tiwari put down his papers in August. Salesforce and NVIDIA partner to develop advanced AI capabilities for enterprises, focusing on autonomous agent and interactive avatar experiences. The companies will work together to deliver optimized, predictive and generative AI workflows. BlackRock and Microsoft plan to launch a more than $30 billion fund to invest in artificial intelligence infrastructure to build data centers and energy projects. The investment vehicle, known as Global AI Infrastructure Investment Partnership, aims to help enhance AI supply chains and energy sourcing. Those were the headlines that we're tracking for you from the startup world. But the top story tonight, and a CNBC-TV18 News break confirmed, gaming platform Nazara Tech has announced plans to raise 900 crore rupees. The company has been on an acquisition spree of late. Rachna Dhanrajani, who broke that story, is joining us for more. Rachna, how does Nazara plan to use these funds?
This is yet another fundraise for Nazara Tech, as we had reported earlier in the day. This fundraise of about 950 crore through a preferential issue will be used to fund further M&A activities. But what we also understand from our sources that a part of it will be used to fund the PokerBaazi deal, which is by far the biggest acquisition for the company at a value of about 900 crore rupees. And as reported earlier, this fundraise includes most of the Nazara's existing investors. But the new names that we can see include Mithun Sacheti of CaratLane, who has invested about 150 crore rupees. Now, what we also understand from our sources is that Nazara has set its sights on the offline entertainment and gaming business, which is also pretty much in line with their Sachin Tendulkar-backed Smash acquisition, which received a go-ahead just last month from the Committee of Creditors. So that could be a big one soon. Apart from that, the company also wants to focus on getting into the publishing business. So that's where the newly raised capital might get deployed. Now, speaking of acquisitions, the company announced a hike of stake in its subsidiary Sportskeeda. Now, Nazara owns about 91% of the company by acquiring an additional stake of about 20% for 145 crore rupees. And this is a 50% equity and a 50% cash deal. It was earlier this year in January that Nazara closed a massive fundraising round that was over 3 tranches. It was for 750 crore rupees. And the major names that joined the company cap table included the Kamath brothers. From the 750 crores, 410 had come in from SBI Mutual Fund, who, by the way, have also participated in this latest round of the fundraise. So clearly a lot to watch out for from Nazara Technologies.
Right, Rachna. Many thanks for those details. Now, energy storage solutions company Clean Electric has raised $6 million in a Series A funding round. The round was co-led by InfoEdge, P1 Ventures and Kalari Capital. The round also saw participation from Lok Capital and other investors. Founded in 2016, the Pune-based startup offers solutions that include a proprietary rapid charging technology which can fully charge electric vehicles in under 12 minutes. Joining me now to discuss this further is Akash Gupta, the CEO of Clean Electric. Akash, thank you so much for being here with us on Startup Street to discuss this fundraise. You primarily manufacture batteries for electric 2- and 3-wheelers, right? So what's the kind of demand you've seen and the efficiencies that you're bringing in? You're also eyeing the 4-wheeler and heavy electric space as well. What's the plan on that front?
Thank you, Arundhati, for having Clean Electric on your show. Yes, we have commercialized our electric two-wheeler battery products, which can be charged in 12 minutes. And we have already deployed close to 1,000 battery packs in 37 different cities with our OEM partners who manufacture electric two-wheeler. We are in discussions and advanced certifications of our three-wheeler battery packs as well, which have a capability to charge in under 20 minutes and using an open network charging protocol, which will be a game changer for the entire e-rickshaw and the L5 electric three-wheeler in the next 12 months. And we are in pilots for the electric four-wheeler battery packs, which includes cars and light commercial vehicles, which will also get into production in year 2025.
Absolutely. So big plans there. But one thing that we notice is that your batteries are priced at about a 10 to 20% premium to other players, right, who offer the same, who have the same offering. So how are you staying ahead of competition? Any plans to rationalize rates there?
So, Arundhati, basically, in the market, people are offering 1 hour, 2 hour, or 4 hour charging time. So, if you have to buy a better product, it has to come with a certain price premium. So, our batteries can get charged in 20 minutes. That is the reason for 10 to 15% price premium because of better technology. And this is also due to the fact that we are at a pilot scale manufacturing. As we scale up our operations over the next 2 to 3 years, we will see price parity across all our product portfolio. We are into megawatt hour scale production. As we scale the manufacturing into several hundred megawatts hour and gigawatt hour, our price parity will be there with respect to any OEM who is offering battery to different OEMs, basically.
So as you scale up production, we'll see some price parity there. But you also just recently raised $6 million, right, about a week back. So if you could tell us, how do you plan to spend the funds and any new offerings in the pipeline?
Yes, basically we have raised $6 million in equity from InfoEdge Ventures, Kalari Capital, Pi Ventures, and Low Capital. These are very high quality institutional investors which has backed us. And we intend to scale up our operations. We are expanding our leadership team to be able to grow 10x over the next 12 months and continue growing from there on. And we are also heavily investing into the research and development, as the breakthrough which we have got is on the fundamental science-based innovation which we have come up on the lithium-ion batteries. So there is continuous R&D which we need to do over the next few years to be able to bring down the price of the battery to at par with what other OEMs are offering, but with a 200 to 300% better performance. So that is the high-level plan. We will be scaling up our operations to 200 megawatt hour, and then also to invest in R&D and the core leadership positions so that we can build a sustaining large-scale organization from here on.
Absolutely. But, speaking about growth, if you could take us through what you're clocking right now in terms of revenues, and where do you hope to end the year? What about profitability at this point?
So we are doing around $100,000 in monthly revenue, which is close to 1.5 million ARR, you can say. And in the next 12 months, September 2025, we aim to do 100 crore ARR, basically 12 to 15 million in annual revenue run rate by the end of year 2025. And the growth will primarily come from the electric three-wheeler and the electric four-wheeler category, which we are venturing out, which is into certification stage. And that is the growth plan over the next 12 months, basically.
All right. So that's the growth plan over the next 12 months. And, you were talking about how price parity will only come in once you increase your production capabilities, right? So if you would tell us what your current manufacturing capacity is at and, what's the target for production by the end of this year and how much you want to grow it by?
So we have deployed around 1,000 batteries over the last 12 months. In the next 12 months, we will be deploying close to 10,000 battery packs in terms of number of units across two-wheeler, three-wheeler, and electric four-wheeler battery packs. And in terms of megawatt hour capacity, we are close to 20 to 40 megawatt hour as we speak. And we will be doing around 200 megawatt hour in year 2025, in the last quarter of calendar year 2025, basically.
All right. And, if you could quickly in 30 seconds tell us about your collaborations, right? You already have 2 that you've announced. And how many more partnerships are you looking at, and all of them in India? Are you already in talks with people?
So we are looking at 4 more important collaboration in the electric three-wheeler and the electric four-wheeler space, which will help us to reach our 2025 targets. And we are in discussion with the global car makers basically, since 12 to 20-minute charging time is unheard of globally as well. Tesla also takes 30 minutes for full charge. So there are global interest also with some global European OEM and that are in pilot stage. So by the end of next year, we should have technology demonstrator on a four-wheeler with a global OEM as well based out of Europe for global market. Basically.
Right. So in talks with global players as well. All right, Akash, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best going forward. With that, Ritu, it's over to you.
Thank you.
Private wealth management platform Ccentricity has raised $20 million in a seed round at a $125 million valuation led by Lightspeed and other investors including the MS Dhoni family office, the Berman family office, Ritesh Agarwal of Oyo, among others. Now, this fresh capital is going to be used to scale Ccentricity's two platforms, that is Invictus and One Digital, expand its private banking services and pursue strategic acquisitions. For more on this, I'm now joined by Manu Avasthi, the founder and CEO of Ccentricity. Manu, thanks for your time here and welcome to Startup Street. Start by telling us about this funding, specifically the steep jump in valuations. Because in your last round of funding in 2022, Ccentricity was valued at $20 million, and in 2 years from then, you're valued at $125 million. What explains this steep rise in the valuation?
Well, the market opportunity, the execution, and the growth, I think so all combined together really explains it. I think so we have made a product which is a couple of years ahead of the market. The users that we have onboarded, the clients we have onboarded is purely reflective of what we have done. And I think so put together and the future growth that we all foresee in the wealth management space, not only account of the growth of the Indian wealth market, but also the way the market has been currently underserved in tier 2, tier 3, tier 4 cities, and even differently on the ultra HNI segment. All of these things put together actually justify the valuation that we have got at this point in time.
Okay, and how do you plan to deploy the money? Give us a sense of what your plan is with Invictus and One Digital. And when you say you want to expand the private banking services, are you looking at entering into other financial services besides wealth management?
So this entire money that we are raising is for the growth purpose. It's not a sustenance or a survival capital that we are raising. The use case is as follows. We are going to invest heavily into technology. We have a 75-member team. We are going to take this team to 100, 150, 175 to be precise in terms of the tech team. We are adding 3 more lines of businesses. The first which we are adding is the NR business. So digitally, even the global market segment is very underserved for investing into India. That's one business. 12 to 18 months down the line, we will be up and live. We are adding insurance broking as a business in times to come. We are adding stock broking as a business. So these are the 3 new additions that we are going to do. On the existing business front, we are going to add 40 to 50 private bankers for Invictus, where we only work with families which have greater than 100 crores of financial portfolio. That's a segment where we are breaking through very big and fast. And on the retail B2B2C, which is One Digital as a segment, we already have 27 offices across 27 cities in India and 14 states. We intend to map almost 95% of India and scale it up to at least 100 to 125 offices across India.
Well, Manu, you're also looking to pursue strategic acquisitions with this capital. How much of the capital is going to be allocated towards that, and in what areas are you looking at M&A? Any talks that are currently on?
So specifically, this is going to be around the technology. I mean, it's more now going to be a strategy which is buy versus build. So we have to augment our tech story faster and bigger. So all the small players which are there in the market and who we believe are going to be a strategic value add to us, we would be rather looking at really taking over some of those businesses and some of those companies.
Well, since you just told us about your plans to enter into the insurance and broking segments as well, how soon do we see you enter those segments, and is that going to be through M&A?
As soon as we get the licenses. That's already there in the roadmap, and it will all be organic. We are a greenfield company. Our technology is completely owned by us. 100% it is owned by us.
All right, and what is your current client base? How much of it is in tier 2, tier 3 cities? And what sort of growth, importantly, should we expect in your assets under management from where it's currently at?
So if I give you a 5-year perspective, we are looking at building 50,000 crores of assets under management on One Digital, which is purely catering to tier 2, tier 3, tier 4 cities. From a current AUM of roughly around 4.5, 5,000, we are oscillating between that range. We look at to grow at 10x on One Digital. And similarly on Invictus, which is the ultra HNI segment, we look at adding another 50 to 60,000 crores. So totally as a firm over next 5 years, 4 to 5 years, we are looking at adding 1 lakh crore of AUM from here.
Well, lastly, in FY23, you reported about 13.5 crores of revenues, 1.3 crores of net losses. How is FY24, both in terms of the top line and bottom line? And how's FY25 shaping up?
I can tell you, we have grown 3.5x over FY23 and 24. And FY25, we have grown 100% over FY24 in just about 5 months of our operation. So we are looking to grow almost 3x over FY24 in this financial year. Interestingly, just while we are on this point, we started our operation in April of 2023, so which last financial year was our first financial year. And in the 11th month of our operation, which was February of 24, we actually became we had an operating break-even.
On that note, it is time for us to head into a short break. But coming up next, UAE-based technology holding group G42 has announced plans to launch Nanda, a Hindi large language model designed to offer Hindi language speakers an opportunity to leverage generative AI. We put the CEO on the hot seat to take a deep dive on Nanda. Stay tuned. Welcome back. You're still with us on Startup Street. UAE-based technology holding group G42 has announced that it will soon launch Nanda, a cutting-edge Hindi large language model, a 13 billion parameter model trained on approximately 2.13 trillion tokens of language datasets, including Hindi. Nanda is the result of a collaboration between Inception, a G42 company, Mohammed bin Zayed University of Artificial Intelligence, and Cerebras Systems. To tell us how Nanda's release offers over 500 million Hindi language speakers the opportunity to harness the potential of generative AI. Joining me now is Manu Kumar Jain, the CEO of G42 India. Manu, thank you for taking time out and being here with us on Startup Street. You know, to begin with, why don't you tell us a little bit about Nanda? Who is this for and how does it accelerate the growth of the Hindi language AI ecosystem? And most importantly, how does it support India's AI ambitions?
No, first of all, thank you so much for hosting me and having me here. So Nanda is a large language model, a latest AI model, which has been developed specifically for India. This model represents a huge leap forward towards bringing AI in the hands of 500 million people, as you mentioned, and ensuring that we build something what we call as equitable AI, which means AI can be used by anybody and everybody, and not just by a select few, and that too in their own native language, which is Hindi. So this has been modeled, built by G42, and it's one of the group companies, Inception. And it is perhaps one of the largest and the biggest Hindi-focused models for India.
All right. And, you say the model was trained on Condor Galaxy, right, which is one of the world's most powerful AI supercomputers for training and inferencing built by G42 and Cerebras. If you could give us a use case to highlight Nanda's tech edge, what sort of sets it apart?
Yes. So, yes, it was trained on Condor Galaxy. Condor Galaxy is one of the largest supercomputers in the world. It is housed in California in US and is built by Cerebras for G42 or one of our G42 group companies called as Core 42. Coming to use cases for an LLM or a large language model in India, it could be a lot of them. First of all, it can really help bridge the language gap because India is a diverse country with probably more than 30 languages, and not everybody is fluent in English. People want to consume content in their own local language, on their own native language, and that's where something like Nanda really helps come in and helps bridge the gap between various sectors such as banking, healthcare, government services, and more. It can be used for building healthcare services. For example, people living in small towns and villages, they can now get access to world-class healthcare thanks to an AI model, which can speak their own native language. There could be education tools built on Hindi LLM, where students can ask questions, read material, and the model can help answer in their own language. It could also supercharge large-scale technology solutions such as UPI, Aadhaar, ONDC, and others. And it could also be used for content, for example, creating really good content, music, videos, movies, any of these things. So the number of use cases are really immense.
Yeah, so essentially the use cases are quite huge. It can be used across all sectors from how you point out. So the big question then is, when will Nanda sort of launch in India? Are you seeing a sort of demand for it already? And what's the kind of impact you hope it'll create?
I believe there would be a lot of demand. We've already started conversations with multiple people, the various sectors in India. For example, we were talking to the CEO of one of the largest banks in the country, and they said they can possibly use a model like this, not only for customer care, but also for simplifying the way they generate different insurance products. Things which takes weeks and months can now be done in like a very short period of time. Or they can use a model like this for automating the entire fraud detection platform. We were talking to a movie producer, one of the large movie houses, and they said they can basically use a model like this for shortening the entire duration in which they do the planning on which shoots, where to do shoots, how to plan different actors, who will come when. All of them can be automated. It can be done by AI rather than doing by a human being. So are we seeing a demand? These are early days, but the early signs are very positive. And wherever we go, a lot of people are saying they can use something like this, which does AI work in their own native language.
Right, absolutely. So from a movie producer to a big bank, if you could give us some names, that would be great. But, more importantly, how competitively priced are you on this, Hindi LLM? And what's the revenue model that you're sort of looking at? And those names, if you could give them to us.
Names, I don't think I would be able to share at this point of time because these are early conversations. With respect to revenue, so the base model that we will have will be open sourced. Similar to how we have done in UAE, which is we have perhaps the world's largest bilingual Arabic model, JS, and it has been open source. So the base model here, we will make it open source so that anybody who wants to use it can basically use it. But on top of it, specific models that we can build for example, for a movie production house or for a bank. So over there, we will have some sort of a commercial arrangement with these entities where they will pay us money for building specific models for them or for building specialized model. So again, early days for us to comment on specifically how we'll monetize, but that's the general thinking where a large number of people can benefit from the base model, which is open source. And then also we have some sort of revenue generating mechanism on top of it.
All right, Manu, so early days, but it'll be exciting to see what it can do for the Indian market. But thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best going forward.
Thank you so much.
Moving on, the festive season in India has kicked off in full swing, and like every year, e-commerce players have announced their flagship sales. Amazon's Great Indian Festival will start on September 27th with early access on September 26th for Prime members. Shilpa Ranipeta spoke to Saurabh Srivastava, the VP at Amazon India, to understand how it is gearing up for the sales season. Take a look.
Festive season is upon us. Started from, Raksha Bandhan, Janmashtami, Ganesh Chaturthi, and now Onam. And now we are getting into the even higher gear. We believe this is going to be the biggest festive season for us. We're very confident of that. And we are getting ready on all the fronts. So we are getting our whole delivery and operations infrastructure ready so that we can serve the customer across 100% of the pin codes. That has always been our focus. And also get our selection, the broad selection that we have further expanded. To tell you, today we have about 1 million products that can be delivered to Prime customers on the same day, and 4 million products that will come in one day.
What about the expansion of capacity, Saurabh, with respect to sellers or even with respect to warehousing capacity?
We have made changes on our seller fee so that they can offer attractive deals to our customers. So we have reduced our seller fee from 3% to 12% across different categories so that they are enabled to do so. On infrastructure side, from server capacity to physical fulfillment, so we have put about 43 million cubic feet of storage capacity across 15 states in our fulfillment center for our sellers so that they can store their inventory. We have sortation center in 19 states now, 2,000 delivery stations, and we have hired almost 1.1 lakh associate to do the fast and reliable delivery from Amazon across the country.
Saurabh, what's the consumer sentiment like on your end? Because offline retail has been seeing a slowdown. Is there any such indication for you when it comes to e-commerce?
When we look at what happened in Prime Day, when we look at what happened in during the Great Indian Freedom Sale, we see everything is on the upswing. I talked about already premiumization. People are actually buying more premium products in the same category. So that shift is there. We believe the vast selection that we bring to the customer and the fact that we can serve all this selection across the country, that is reflecting in our numbers, internal numbers. So we are very upbeat. It's hard for me to comment on overall industry.
Let's talk about the Prime membership also. How has the Prime base grown for Amazon? And this year, will you be making any changes to widen the Prime base this festive season?
Prime is probably the biggest deal in itself. What we have done is made this, the Prime membership even more affordable. So we came up with a Prime shopping edition. So where the customer, where they are not interested in rest of the benefits and they are only focused on getting fast free delivery and other shopping related benefits, we have a shopping edition that's much more affordable for our customers, and customers are showing a lot of preference for that.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.